Hello everyone, welcome to Homely Chart. I'm John Lu. Today I'm going to share with you weekly summary of stock market in this week. In this video, I'm going to talk about the market analysis and also some individual analysis because some of you already post some stock name in our group. So I hope my analysis can help you and you can learn something from my video. Okay, first slide, please have a look at the disclaimer. In this video, we are going to talk about some example only for the education purpose, not for trading recommendation or guidance. Okay, first, we can have a look at the USA market. Then this is daily chart of S&P 500 index. We can find a uptrend line. In this uptrend line, I connect the two lows, and now we know a gap down just penetrate the uptrend line. Then after this penetration, the rebound just segue around there, and you can see the gap haven't been covered yet. So represent the buyer's power not strong enough can return back above the line or can cover the gap. And another thing is we can check about the indicator we have already learned in our group for MCD. For MCD, we can see the red bar in this period all the way drop down a little bit, and also the red bar below is moving average, the purple line. So represent now this chart short term not strong enough. And also we find the comparison with the history. Sometimes the price drop into the red belt. The red belt represents a medium-term uptrend, and the green belt represents the medium-term downtrend. So the retrace and rally up, and retrace and retrace and rally up. Okay, so now already retrace once and twice and three times. So in Thursday trading, the index tried to return back but still below the belt. So if the price all the way stay below the belt more than 3 days or more than 1 week, short term and medium term will be dangerous. Okay, so you can compare with the last time, February. Okay, then now we can check another chart for Nasdaq. The same on daily chart. We can see the only difference between the Nasdaq and the S&P 500 is the Nasdaq has already hit a new high and looks much stronger than S&P 500. And the thing is that the previous high after penetration will become the future support. So that's why the Nasdaq just returned back because the drop down already touched the support level. And we can see two doji. The doji represent the power for buyers and sellers can touch a balance. But the number two is like a shooting star. Number one is a doji. So number two, I think you can think as it's a shooting star. So represent a very strong resistance for the intraday trading. Okay, so until now all the candlestick above the red belt, so medium term still uptrend. So we can get a conclusion now the Nasdaq stronger than the S&P 500. This is very normal because each time when the market already rose up too much, Nasdaq will continue move up because of some technology company so strong, stronger than other sectors. But for the traditional sector like the Dow Jones and the S&P 500 will never follow the Nasdaq too much. So we can see this is the weekly chart. We can see last time around the October 2018, before the correction, here we can see the Dow Jones Industrial Average only can touch the previous high, but Nasdaq already hit a new high and every week and hit a new high. So we are sure in this period Nasdaq much stronger than the Dow Jones. So that's why later finally the both all the way drop. So we call this period is divergence between the Nasdaq and Dow Jones. Then after a while, a drop. Then this time you see, because of the strong and good performance for technology company, then we find the Nasdaq already hit a new high, already recovered the loss in February and March. But now the Dow Jones and the S&P 500 only can touch around 80% for the drop. So haven't covered the loss in February and March. So I think this is another divergence. So we must monitor the potential risk. If you are not an aggressive trader, please don't try to explore more risk in this period. Okay? So don't be eager to buy long position for medium term and long term here, because it's not the right timing to open your position. And now let us switch to our local market, STI. STI also not stronger, and this time after the 11th June, the market dropped and followed the USA market all the way. We are not strong. And Thursday we have already touched the longest trips. These trips represent is the very much volume accumulation here. This level will be a very strong support according to the volume accumulation, so around 2,580. Then according to the Fibonacci retracement, we also can see the two levels very important for us. Okay, so the number one is 2,580 to 2,600, and another one is 2,500 to 2,520. So I think if you are the short-term trader, can try to monitor these two levels for you to do the bottom catch if you are the short-term trader. And by the way, the Malaysia market, this time the rebound of Malaysia market stronger than the Singapore market. But now the drop all the way down, even though maybe we have the confidence the Malaysia market got better performance for individual share, but the index also not bullish. Long term still in downtrend, haven't been reversed. So we also can combine with the Fibonacci retracement and the chips distribution. We got the level here 1,440 and the 1,400. These two levels you try to monitor, and if the market drop down this level and touch and stop dropping down further, I think it's a short-term opportunity for some trader want to do the bottom catch. And now let me show you the two slides for STI performance in the last 10 years. I got the history record. Then you can see most time the July the market will rise up, but the August market will drop down. But this year everything changed because of the COVID-19 pandemic. Then you see the March, most time the market rise up, but you see this year because of the COVID-19 pandemic, then the market drop. So I think July this year maybe also change. So most year July market rise up, but maybe this year will down. That is my personal idea. Then another one is for the KLCI, the same. Most year July the market will rose up because you can see the percentage around 70%. But maybe this year also change. So I think the end of June and the July. Okay, this July is half. Sorry, July is half. For this time you see June already reversed. I remember in early June and the end of May, I already shared with you my personal view. So June will reverse, but July, you see, half and half. So it's like a gambling. You don't know up or down. But I think also if the USA market drop, we will follow the USA market. Okay. Then now have a look at some individual share. Somebody already post in our group. For SGX, now the price already dropped down all the way and very close to the previous low, around $7.90. But now, after this retrace, we can see the first recircle in daily chart. And multicolor dragon, we haven't find the red bar. So you can think this as a earlier or aggressive buy signal, because now no red bar. But if you are the short-term trader, can try a little bit. But remember, red circle will be a stop loss. So for Homely member, you can buy the share and follow the signal, and the signal will give you the automatical stop loss. The circle turn white, we must do the stop loss. Okay, so it's a short-term buy signal, but now red bar haven't appeared, so not so strong. Only can buy a little bit, but remember, don't buy too much. And Yuma, this one I already shared my view in my video yesterday. In my video, I share with you the upward channel. I draw the channel, I got the channel line. So according to the channel theory, when the price all the way rise up and touch the channel line, will be the strong resistance. And when the price can return back and touch the uptrend line, will be the support. Now the red bar increasing and drop a little bit, so the candlestick touch the line. So I think short term is not the good point to buy. Waiting for some retrace and can enter maybe around the previous high around here. Okay, that's for Yuma. The channel line can give us some indication. Also, if you want to combine with some other moving average or trend indicator, can find long term maybe just reversed, but short term maybe get a retrace. And this Franken, I find it's a very good penetration for this downtrend line, this long green bar. But after this penetration, just 1 to 3 days, a drawback. So I think it's a testing for this support of trend line. So still bullish, still got the opportunity. And after this sideway and sideway breakout, the retrace also above both trend line and this box area. So I think still bullish. So if you have the position, still can hold. And next one for the Innovio, this very strong share for the medical sector in USA market. I remember around 3 days ago when I used this example to show this to our member, I let them know this is a strong sector, but remember, sometimes you buy the share. We hope next day will boom up. But remember, the best enter point is not the day you buy, the next day the price boom up. The best buy point is you follow some system, you follow some indicator, and you can copy and apply in the future. So remember, multicolor dragon combined with red and red circle. So we can get a very high possibility when we apply this system on the strong share and active share. As long as the market not too bad, not too bearish, we can apply this indicator combination, MCD plus red and red circle. So your first red circle to buy, and if you don't want to hold for long, well, as long as you make some profit, you can take your profit, or you can hold for a bigger or larger profit. Depends on your trading style. You are aggressive trader or you are conservative trader. Okay, so the MCD plus the red and red circle. Another one, SWKS. Somebody post in the group, USA share. Also the same. the price already hit the new high and higher than the previous high around 127.30 cents. So I checked the closing price last day, just the same. So now this retreats just are testing the previous high. That the MCD, the red bar, decreasing and below the purple line. So short term, not super strong enough, but the trend for medium term and long term, no change. Only the short term is a red circle and sideways and testing the support of the historical high. So I think still got opportunity for medium term and long term. And 7191, okay, that is a major share. I find recently sideways for a long while, around 2 weeks, and volume very low, represent not active trading. And this level just the previous high. So the same, previous high become the future support. So the $1.12 is a strong support level recently. So if we can find the circle turn red, can buy again for short term. But if in the future, the price close below the $1.12 will be very dangerous. Okay, this is for the chart. Okay, or it's not $1.12, it's $1.42. Okay, sorry, 42. Okay, then we continue to see the chart. Okay, so I think now all the share we already analyzed. Then I hope this video can help you to learn more about our indicators and for some trend analysis and for some indicator application. So thank you for your time. Class is over.